Companies need to reach a certain size and scale before we at ET Now start to cover them seriously. That's why initially we may have missed the bus on alkyl amines a little bit, but today it's very hard to ignore this stock, which has given you a 329% return in 1 year, 115% return in 6 months, a 60% return in 3 months, and a 35% plus return in the last month alone. Now, as you might guess by the name Alkyl Amines, the company is into the manufacturing of various aliphatic amines, amine derivatives, fine chemicals, and specialty chemicals. Now, this caters to the end industries of agrochemical, pharmaceutical, water treatment, specialty chemical. So there's a wide host of applications for these products. But mind you, let me tell you, this is not a commoditized business. They are tailor-made products that are customer-specific. It revolves around custom synthesis, contract and toll manufacturing, custom contract R&D services where this company can actually carry out research for innovator companies. And that is really what has been the trigger for this huge up move that we've seen in the stock over the last year, as well as what has led to a huge improvement in performance. Now, some of the metrics that you might take away that show you the degree of improvement in the overall business, there's been 1,000 bips margin expansion year on year. So if you look at things in 2019, margins were around 22% EBITDA. Today, as of the latest quarter, and they've been inching up sequentially, mind you, not even 1 quarter of a pullback in margins, they stand at 32%. So that's a clear 10% YOY jump. Revenues have also grown considerably during this period, but profitability has grown far greater than that, which is why if you look at the ROCE of alkyl amines, it also ranges 40+%. In fact, it's around 41%. Even the ROE is around 41 or 42%. So recently a prominent investor, Saurabh Mukherjee, talked about how he likes companies that can generate a far greater return on capital than the cost of capital. And alkyl amines, which is one of his picks, fits that profile perfectly, as that it far exceeds the cost of capital. The returns on this business are absolutely stupendous. So the sales CAGR is around 18% for the last 10 years, but the stock price CAGR over 10 years is now at a whopping 50%, and that's because your earnings have just really grown at a tremendous rate. The stock still trades at around 25-30 PE, which is expensive, but if you look at stocks like PI Industries, there are numerous other chemical stocks which get a very fancy multiple, and this might be one of them. Also, in terms of robustness to COVID, it seems to be catering to end user industries which are also experiencing high volumes despite COVID. Both agrochemical, pharmaceutical are really been surging. So it seems that the demand outlook here as well is quite solid. And that's why this stock has just given you one of the most phenomenal returns in the last year. And it should continue to do so, barring any drastic change in the business operations.